Good afternoon and welcome to this IG special coverage of the US non-farm payrolls data out in 5 minutes time. I'm Jeremy Naylor. Let's take a look first of all at what we're expecting. The economists polls suggest that we could well see 190,000 job creations forecast for the month of May. The unemployment rate seen rising one notch to 3.5%. And the average hourly earnings 0.3% month on month, 4.4% year on year. Now that's well below the current level of consumer price inflation, which leads us to believe that everything seems to, at the moment at least, to be under control. That said, could we, after yesterday's stronger than forecast private payrolls number, expect something similar in a few minutes' time? The ADP employment survey showed 278,000 jobs opened in May. Forecast had been for 170,000. So, proportionately, using that ADP surprise, that would be an upside reading for non-farm payrolls, close to 300,000. So, could there be an upside surprise to this number? Now, let's take a look at some other data. This chart we have here shows unemployment. The unemployment rate is back to pre-COVID-19 levels. It's clear that jobs are being created at an appreciable rate, and this alongside a relatively strong GDP number and inflation coming down, there may yet be a soft landing for the US economy. But if the Fed does continue to raise rates, things may change. What could stir that today? Well, certainly I think if we go towards the 300,000 jobs, that is likely to lead the Federal Reserve into a more hawkish rhetoric, at least, if not moving up further on interest rates in the longer term. And that could yet see further pullback in growth that we've seen. Now, let's take a look at the next chart. This is a comparison of the Fed funds rates and US consumer price inflation since January 2021. Now, to cope with this rise in interest rates, we do still have growth, as I said, so the economy is still performing. And at the moment, there is no signs of any fissures or cracks appearing in growth that might lead us to suggest the US economy may yet go into recession. What could drive that? Well, I think if we do see a return to higher oil prices, that might be a problem, but that doesn't look like it's going to happen either. That is one of the things that's been driving inflation amongst many Western economies. Driven as they are into buying oil into the more expensive areas around the world. Russia, of course, is continuing to pump relatively inexpensive oil through to those economies that don't mind taking it, such as China and India. We've just seen recently a contract with Japan taking Russian oil. So there are areas of the world that are benefiting from a lower rate of inflation because they have lower oil prices. So this is the data we're expecting. Let's take a quick look at where we are in terms of some of the charts. I want to bring up the euro dollar first of all. We've been following this drop here for the euro against that stronger dollar right the way down to the lows we had 31st of May, that was Wednesday this week, where we saw a dip below the 106.53 support level. That was a 76.4% Fibonacci retracement from the lows that we had back on the 15th of March. That swing high all the way up at 110.96 was the top on the 26th of April. Now, since then, we have seen this drop. I was looking at this 107.38 level as the first line of defense, if you like, or support, and that was broken. So continuing to be short on this market, we took it down to below that. Now looks like we've got a turnaround in the air. So I'm waiting for this data to come out at the bottom of the hour just to confirm this uptrend that we've got at the moment for the euro against that US dollar. Don't forget, at the moment at least, we're also trading in the knowledge now that we've got the US federal budget's now been approved. It's just waiting the presidential seal. So that is something else that's happened in the market, which has led to a slightly weaker US dollar. That means that people are taking on more risk and looking for other areas of the market where they're seeing some benefit. MACD just about to turn around, which would be another interesting factor. And if we ended the week with this blue line above the red dotted line, that would give me more inclination to go long on this. And we'll talk a little bit more about some of the trades after the release of the data in just a short while. Quick snapshot of where we are on sterling against the US dollar. It's been a really good week for sterling once again. We're currently trading 125.27, not too far away from the 126.80 level, where we are seeing some of the trades at the moment on this market. We're waiting the release of the data from non-farm payrolls in just a moment from the Labour Department. Just want to quickly take a look at what's happening as well with the US equity markets. And you can see here on the 24-hour markets on the IG platform, we're punching higher again in this session today. We're now trading at levels not seen on the S&P 500, not seen since the 19th of August last year. So we're talking something like around about 9 or 10 month highs for the S&P 500. Much of that has been driven by what's happening with the moves that we've seen in the markets for the technology stocks, particularly where the real moves have been. Let me just quickly go back to what's happening on euro dollar, because we're getting a breaking news headline coming through with the non-farm payroll data. The euro dollar at the moment is showing losses. Let me just put that onto a 1 minute chart so that we've got a better idea as to what's happening in terms of the individual moves that we've got. And you can see here the euro losing ground against the US dollar. We're buying back up into that at the moment. Now, I was saying the unemployment rate was going to go out from 3.4 to 3.5. In fact, it's gone out 3.7. But non-farm payrolls very, very strong. And I was looking potentially at a figure closer to 300,000. In fact, it's come through at 339,000. And we've got this consensus, 190. So you can see it's way beyond expectations. And I haven't had a look at what the spread is in terms of some of the economists and what they were looking for, but I wouldn't mind betting it was off the top of many, many of those economists polled, suggesting we're going to see a lower figure. This does fall in line with what we had for the ADP private payrolls, which came through yesterday. Just a quick update on where we are in terms of some of the earnings as well. 4.3%. We've been looking for 4.4% year on year. So that again is showing that employers do seem to have this rise, this demand that workers are putting in for higher wages. Workers seem to be able to moderate that. The average hourly earnings coming through on a month-on-month basis, 0.3%. So that seems to me all to be in a pretty good place. This minute-by-minute chart would seem to indicate a big move, but in the grand scheme of things, let me tell you, it really hasn't moved that much, and you can see this if you look back at a daily chart. So where do we go from here? Well, the position remains that we've got this trade at the moment where we've bounced off the 76.4% fib, and despite the fact we've got a little bit of downside at the moment in this market, we're looking for a possible turnaround on the MACD. At the moment, I wouldn't be taking any positions on this because I'm not sure where it's going to go next. Might be better to wait until next week. We've got interest rate meetings coming through next week in Australia, and the Canadian Central Bank, also in India as well next week. And that really does sort of highlight just how far down the list of interesting items we've got next week. Corporate-wise, virtually nothing to look out for. Let me just quickly take a look at what's happening on the S&P 500. We've seen this market move up today. Just want to look at what's going on with the minute-by-minute chart, just to give you an idea as to what's been happening. Very volatile trade in terms of the intraday trading at the moment, but we're pretty much where we started off just before this data was released. So the bottom line is that we're in a situation where we've got jobs being created. We don't seem to have inflation coming through in terms of wages, which would be something which would be a real alarm bell for economists and indeed the Federal Reserve. And it looks like we continue to be on the Fed's trajectory. We will see more interest rate rises. The big question is now, will it come in the middle of June when we see the next interest rate meeting? And will the Fed be pushed into going another 25 basis points? I think in the next couple of hours or so, we will see more and more economists coming out suggesting that the Fed could well end up pausing this time around, because there's no evidence to suggest that, despite the fact that more jobs have been created, which is good for the economy, there's no suggestion that there's any wage price inflation coming through. And if you were to get that, that would be a problem, and that would ring alarm bells for the Fed. But you can see at the moment we're looking at a S&P 500, which really isn't moving much from where we were before this release of this data. So the bottom line is, I think that steady as she goes, and I'll be waiting to see if I can see some detail given from economists about what they think about the next Federal Reserve meeting. But I'd be very surprised if we do get a majority expectation in the market that we'll see the Fed move again at the next meeting. It could well be the first meeting in a while we'll see the Fed put their foot on the brake on these interest rate rises. That's the situation as far as we're concerned as we look out to what's happening on the picture for the non-farm payroll figure. The message is steady as she goes, jobs have been created, it doesn't show any inflation coming through, and that's the bottom line. We will be back at 4 o'clock this afternoon when we'll take a look at what's going on for next week and some of the events to watch out for us traders. As I said, we've got 3 central bank meetings next week. We've got some German economic data coming through, which might give a little bit of a direction to the German DAX. But so far as the US is concerned, we are going into what we see as sort of midsummer lull, if you like, before the next round of earnings start to come through. Certainly corporates next week, very low on the agenda in terms of some of the things to follow on with. But it is a full week's trading, and we will be back on Monday morning at 7:30 a.m. It'll be Angeline Ong in the hot seat as I'm off for a couple of days. Enjoy your weekend. Watch out for the release at 4 o'clock this afternoon. I'll be talking with Axel Rudolph about next week's trading opportunities.
For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.